If you travel for your business, you might be wondering, are travel expenses tax deductible? The answer is yes, but only if you follow the IRS rules. Today we're going to break down business travel deductions. What qualifies, what doesn't, how small business owners can avoid common mistakes that lead to denied deductions. Similar to other business expenses, business travel expenses must be ordinary and necessary to be deductible. An ordinary expense is common and accepted in your industry. A necessary expense is helpful or appropriate for your business. It doesn't have to be required, it just has to benefit the business operations or growth. Personal travel expenses, however, are not deductible. The location where the expenses occurred is an additional important factor. The IRS doesn't look at where you live, it looks at your tax home. Your tax home is generally your principal place of business or employment, not your personal residence. You're considered to be traveling for business when you're away from your tax home overnight. Your tax home can change if you relocate for work that is expected to last for more than 1 year. When you're traveling away from your tax home for business, many costs may be deductible, including transportation by plane, train, or car to the business destination. If you use your vehicle, you may deduct either mileage or actual expenses depending on your business structure. Taxis, Uber, or rideshare services to and from the airports, hotels and business locations, baggage fees, hotels, Airbnbs or other lodging, meals while traveling, dry cleaning and laundry during overnight travel, business-related phone calls, miscellaneous business expenses such as equipment rentals. These deductions only apply to costs that are directly related to business travel. A business trip to Florida might sound like a great opportunity for a family vacation, but this is where owners need to be careful. Travel expenses for spouses, dependents, or companions are not deductible unless the person is an employee, the travel has a legitimate business purpose, and the expenses are reasonable. Different rules apply when traveling with customers, clients, vendors, or professional advisors. Travel expenses are deductible if the trip is primarily for business. If your trip is mainly business related, but you extend it for personal reasons, the transportation costs to and from the destination are still deductible. The lodging and meals are deductible only for the business portion of the trip. No allocation is required for airfare transportation as long as the primary reason for the trip's business. The IRS requires proper documentation for travel deductions. Your record should show the amount of each expense, the time and place of travel, and the business purpose of the expense. Without documentation, otherwise valid deductions may be disallowed. Many small business owners use expense tracking apps to capture receipts and record details in real time. These tools make it much easier to stay organized and prepared if questions ever arise. With good records and a clear understanding of the rules, you can deduct legitimate travel expenses while staying compliant. Looking for more small business finance tips? Subscribe to our channel today.